It's 9 a.m. in Hong Kong and Beijing. Welcome to Bloomberg Markets China Open. I'm Annabelle Drawlers with Yvonne Man.
Our top stories this morning: China tightens its grip on the stock market, banning major institutional investors from selling equity holdings at the open and close of trade. Nvidia surges after hours and lifts U.S. futures after delivering an upbeat sales forecast, declaring generative AI has hit the tipping point. And latest Fed minutes show officials more concerned about cutting rates too soon than keeping them high for too long. So certainly 2 out of the 3 could be good for equity investors here today. The bond market certainly is more attuned to the Fed minutes, but you take a look at what stock investors are looking at. I mean, I think we can breathe a sigh of relief.
Absolutely,
overall.
yeah. Because they really had been priced to perfection pretty much, so they needed to get these good numbers out of Nvidia to justify any sort of continued rally here. But taking a look at how we're going so far for Asia equities, and it's actually IT that's really leading the gain so far, and that's absolutely coming down to those Nvidia numbers. Just another blockbuster reporting period from the company. So revenue for the current reporting period going to be about $24 billion. That's about $2 billion higher than estimates. For the fiscal fourth quarter as well, again, revenue more than tripled, so extremely strong numbers coming out of Nvidia, and that's why you've got the likes of Taiwan just coming online. Here are some of the big suppliers or chip-linked names there. Let's change on, take a look across to Japanese, Korean markets as well. These are some of the chip names. Again, you're seeing those gains that are coming through, even though Nvidia is saying as well, overall supply, those constraints, they're still in place. They're going to be persisting throughout the year. But what we've seen and heard time and time again is really it's that supply that just cannot keep up with the huge amount of demand that's coming through. Speaking of Korea, of course, if you change on, we just had that BOK decision coming out, leaving that key rate unchanged at 3.5%. So that's very much what had been expected by all economists. But you're getting a little bit of support coming through for the Korean won off the back of that, because we've seen yields actually rising over the past couple of months or so. Again, traders really scaling back their wages for global central banks to pivot early. That is playing into what we're seeing in terms of Treasury action as well. As you said, Yvonne, really, we have seen the bond market very much catching up to those expectations from the Fed and those minutes from the latest meeting, saying that most officials are more concerned about the risk of cutting rather than for holding too long. And China equities, you're just taking a look at futures there, not too much change coming through, but still we did see them, of course, yesterday jumping to their highest level in a few weeks. So support measures just continuing to come through here. Yeah,
you look at CSI 300, look at HSCEI, basically have erased the 2024 losses for the year already. So there is some signs of momentum. In fact, we are well above some of the lows that we saw back in January for some of these gauges here. In terms of the agenda here today, it is still that scoop that we had about the net sale ban with tightening grip when it comes to stocks, when it comes to these institutional investors. So certainly that's one to watch here. That certainly is lifting the market in many ways. You take a look at how northbound flows are basically at those 2024 highs. You have the CSI 300 above that 100-day moving average. As we talked about the Nvidia effect, AI stocks very much going to be a driver here today. Private sector law draft. This came out late yesterday about how they're going to, draft some laws to help to boost confidence there. Maybe that's going to help in terms of sentiment. And, of course, to wrap up, we got Lenovo earnings, Sinoland, Trip.com just reported a little bit later on as well. The futures are still pointing slightly lower this morning, Bill.
Yeah, but as you said, it really is earnings that big focus, but those support measures as well. And what we're hearing out from Chinese media flagging the possibility of more market regulations, citing the CSRC, that's the Shanghai Securities regulator, but Shanghai Securities News reporting that measures covering quant funds will be rolled out one by one. It quotes an official who says the regulations are not meant to kill quant trading, but promote its healthy developments. Let's get more on that now with Bloomberg's Asia stocks reporter Ishika Mukherjee joining us from Singapore. And Ishika, I'm curious, what's your take on these restrictions that we're seeing on quant funds? Is that something that's going to prompt sort of healthy market action in China over a sustained period?
Hi, Annabelle. That remains to be seen, really. China is trying to, put pressure on these quant funds to ease some selling pressure from the market right now. So really, the aim there is to promote a revival of the stock market as such. Whether that promotes a healthy development of the sector can be in question. I still remember a few months ago I was looking into how India's quant fund landscape has developed versus China's, and China's was booming, and this was just 6 months ago. And right now it looks very, very dire, the situation for the quant fund industry in China. So it has been quite a 180-degree turnaround there. And we had that scoop overnight, of course, about the net sale of equities not being allowed in the first 30 minutes of the market opening and in the last 30 minutes before the close. These are two closely watched times of trade. Of course, we're all glued to our screens when China opens and when it closes. But again, it remains to be seen how much of an impact that's really going to have on the market, because what these major asset managers and quant funds choose to do with their equity holdings in the rest of the time, and how they play these new regulations. There are always loopholes to be considered, right? So let's see how that plays out. I mean, we all know this came out after Ningbo in June sold about $360 billion worth of shares on Monday in a minute. So yeah, let's see.
Yeah, they're certainly been seen as, the cautionary tale around all this, Ishika. I want to bring up a tweet on X from Hao Hong from Grow Investment. And he talked about what we're seeing here. So the market is also rejoicing about some of these new rules, but remains to be seen whether they would lead to waves of redemption from the quant funds later on. In some way, do you think this is going to scare off offshore investors? I mean, could this actually backfire in some way, Ishika?
Yeah, so we were actually discussing this. So all these measures that are being taken against quant fund trading, or even when you see national team, supposedly the national team buying up ETFs, all this sort of tells offshore investors that the market is not truly reflecting the sentiment, right, on the ground, or the market is not truly reflecting fundamentals as it should be. Trading is distorted, prices are distorted by all these actions against selling and the state buying up all the stocks. So this could scare off foreign investors because they don't really know what's going to happen, how much liquidity is going to be there in the market, or whether when they want to sell, they can sell. So this is leading to questions about true price discovery in the market right now, and I'm not sure that it's going to have a long-term impact. Of course, we have seen the CSI 300, HSCEI trading at the highest in several weeks now, so there has been a good short-term rebound that's actually been the biggest rebound since the reopening rally. But how long it goes on for remains to be seen.
Ishika, thank you. Ishika Mukherjee there, our Asia stocks reporter, joining us out of Singapore. Let's get back to what Goldman calls the most important stock on planet Earth, and that is NVIDIA shares, which is moving across the market here this morning. And there's a lot of debate whether this is actually even a macro event, just given the impact it has had across many sectors, including here in the region. 9% pop in the after hours trade. You take a look at what the breakdown was, as Bell had mentioned, that $24 billion in terms of the revenue guide for the first quarter. That was 10% above consensus. Revenue more than tripled in the last quarter here. And you're talking about numbers that NVIDIA used to generate in a whole year. We're talking about just one quarter now. Obviously, the slowdown in the data centers when it comes to China is one that we're marking very closely on the China show here today. We also heard from Jensen Huang talking about the tipping point still when it comes to generative AI. Take a listen.
We guide one quarter at a time, but fundamentally, the conditions are excellent for continued growth, calendar 24 to calendar 25 and beyond. And let me tell you why. We're at the beginning of two industry-wide transitions.
All right, let's get more on those NVIDIA numbers now. Bring in Bob O'Donnell, President and Chief Analyst at Technalysis Research. And Bob, I mean, just very impressive beat, revenue and earnings. What was your sort of key takeaway, I guess?
Well, yeah, I mean, this is a company that continues to execute and completely blow away everybody's most robust forecast. I mean, they raise their own forecast, the street raises the forecast, and they still beat them. It's kind of crazy. And of course, the big question has been, how long can this continue? How long can this go on? And so I think that's what Jensen was trying to address there, is to say, look, it may seem like we've reached this point, but it's not a plateau. It's really just the beginning, because now this tipping point idea, I think, basically means we're seeing that it's hitting the mainstream. You have things like Microsoft 365 Copilot. You have things like Google Workspace. You have all these other services, Adobe adding Gen AI into their Photoshop applications and things like that. Businesses themselves starting to deploy this stuff. So you're seeing a number of companies wanting to buy their own servers to run their own generative AI. So it's across the board. And so that's why the feeling is, hey, NVIDIA continues to be able to sell every single chip that they can make, and there's still, a big, huge backload behind them. The supply chain has improved. The lead times have shortened a bit, but that doesn't mean things have slowed down. It just means people are getting a little bit more efficient at manufacturing these things.
Okay, that's a good point here in terms of the shortening lead times, Bob. What are sort of the risks? I mean, you mentioned about, how long can they sustain this sort of explosive growth, right? We talk about the competition, AMD coming and just selling that M1 300. TSMC says that they could be working out some of those bottlenecks pretty soon, which could actually start, which NVIDIA has benefited from. I mean, when does the competition start really playing in and those risk factors actually play out for NVIDIA?
It's a great question, Yvonne. I mean, look, the competition has never been more fierce than it is right now for NVIDIA, but they have a huge head start. They have a set of software tools with what they call CUDA that a lot of AI developers know how to use and are very comfortable using. And, oh, by the way, they've been innovating at a pace that nobody else has been able to keep up with. They are just kind of in that old paranoid, only the paranoid survive from Andy Grove of Intel days of, we need to constantly innovate. Even though we're on top, we're not going to stay, flat-footed. We're going to continue to innovate. And so a combination of all of those things puts them way ahead, and it will be for some time. One little data point that's kind of interesting for those who are watching this closely, there's this idea of AI training and AI inferencing. NVIDIA has been killing it on training. Nobody's even touching them on training. The question has been, but what about on the inference side? And one data point that came out of the earnings call was that about 40% of their business was actually for AI or for inference, which is a great sign, meaning, hey, it's not just the training side of things. NVIDIA is doing well on the inferencing side, and that's where they're going to see more of the competition. Net of it all, they are very well positioned. You're going to see people nibbling at them, but they've still got a good road in front of them.
Where we are sort of also watching quite closely is in terms of China, because we know that NVIDIA has been sort of adjusting its chips to get around or circumvent those export restrictions. Do you see that having any sort of meaningful impact to the bottom line if they're still able to export chips, but they're a different type of chip or perhaps a less advanced type of chip? How does that sort of end up really affecting its revenue?
It's a great question, Annabelle. I mean, they did specifically say that their China data center numbers for this quarter were down quite a bit. And obviously, that's due to those government restrictions from the U.S. As you said, they are building parts that are below the performance thresholds that the U.S. is putting in place. But those are likely less expensive parts. So the revenues perhaps are going to be not quite as high as they could have been. But look, even with those challenges, they still crushed it today. So while I think that the China thing from a data center side is something to be aware of, it hasn't been a big issue. I will say another interesting side of the NVIDIA business is automotive. It's much smaller, but they broke $1 billion for the first time for the full fiscal year. And the vast majority of those automotive chips for self-driving are going to China. So NVIDIA does have a whole bunch of China business in automotive, as well as what they're doing on the AI side.
And you touched on that element of competition earlier as well. And Intel, of course, is really seen as a laggard in this space. They've been trying to catch up and developing as one sort of revenue stream that foundry business. We hadn't seen any sort of customers really signed up until today. Just talk us through what you're finding at the event that you're at for Intel today.
Yeah, Intel held their first ever foundry event they called IFS Direct Connect, and they rebranded themselves to just Intel Foundry, a simple brand change. But they had their whole ecosystem of suppliers here, Cadence and Synopsys and Ansys and these companies that help others design chips, and they had some of their partners. They've announced in the past people like Ericsson, they've announced people like MediaTek and Broadcom, and they were there. But the big news, the surprise, was they also announced that they are going to build a chip for Microsoft. Microsoft, of course, has their Azure cloud service. They buy a lot of chips from NVIDIA. They're looking for alternatives, as a lot of companies are. So they're working on designing their own chips. And it looks like one of those is going to be built by Intel in the future, which is a very interesting twist and a positive development for Intel on that foundry business side.
So, Bob, that brings me to my next question. Is NVIDIA still the best AI play, or are there others now on your radar?
Well, I mean, clearly NVIDIA is the best AI play. You know, as you mentioned, AMD's got the MI300. They're coming up strong. We've seen a lot of interest in companies that have the IP, like ARM, of course, has done extraordinarily well. In truth, they don't have a ton of AI yet, but there's huge opportunities for them moving forward. And then, you know, Intel does make some of these chips. It's a much smaller piece of the business. But look, here's a scenario down the road. This did not, to be clear, this didn't get announced. But one of the challenges that NVIDIA is facing in getting more of their chips is the packaging technology. Well, one of the things Intel talked about today for their foundry business is the capabilities they have in chip packaging. So down the road, who knows? You could see Intel Foundry building chips for NVIDIA. Again, that didn't get announced, just so I'm super clear, but it's not completely out of the realm of possibilities. So interesting things to watch. Obviously, this market moves at a tremendously fast pace, and, you know, we'll see what happens.
Bob, great to have you. Thanks for joining us. Bob O'Donnell there, President and Chief Analyst at Technalysis Research. That renminbi fix just crossing your Bloomberg here in the last couple of seconds here. It's been a solid standing out steady at 710.18. But yes, another stronger support here, of course. And we have seen that dollar-China trade breaking below 720. We're at 719.63 this morning. We got the open coming up in just about 13 minutes time. Futures were in the red here this morning. This is Bloomberg Markets China Open. Good morning.
You're watching Bloomberg Markets China Open. Quick check on a stock we're tracking this morning. That's UOB in Singapore. We had its profit rising actually in the latest reporting period. Higher credit card fees, wealth management as well playing into it, but pretty much in line with what analysts had been expecting as well. Still, that stock a little bit under pressure today, and we can get more on the reaction to those earnings with the UOB CFO. That's Lee Wai-Fei. He's going to be joining us at 11:45 a.m. That's Singapore and Hong Kong time. But Yvonne, I mean, it's earnings focus. There's China measures to prop up the market, and then as well you've got the Fed playing into the dynamic today.
I mean, obviously what this means for NIMs for banks around the world is certainly going to be a key factor. We mentioned that with HSBC yesterday. UOB certainly is not immune to that. In terms of the Fed minutes as well, I mean, this is one thing that we're watching out for, is this higher for longer narrative kind of peaking out again. You take a look at what Fed officials are saying. Most flag risks of cutting rates too early instead of too late. One thing that was interesting was about the balance sheet runoff, that maybe they could start guiding the eventual decision on that runoff soon. Right. And some noted the risk of stalling inflation progress. So in some ways, you know, getting to the path of 2% is still looking a little bit more challenging of late. Of course, obviously what we saw with those CPI numbers last week. Let's bring in Garfield Reynolds, our chief rates correspondent for Asia and MLive contributor. He's with us. We're seeing across the bond markets, there continues to be that repricing, right? And you know, traders that went so far the earlier part of this year to price in 7 cuts. We're now closer to 4, Garfield. But we are seeing the market getting more in line with the Fed. The question today, at what point does the market meet the Fed in pricing in 3 cuts for this year?
Well, I kind of have my doubts that the market is ever going to meet the Fed, because my immediate thought on when will the market start pricing for 3 cuts this year is they'll do that when the Fed comes out in March and adjusts its dot plots so that it's expecting 2 cuts this year. Because I think even as the market has been pushed back and back and back on when the first rate cut is going to come, it's maintained this bias for expecting the Fed to go further than the Fed expects to go. And a big part of that is that the bond market there are a lot of uncertainties out there, but the one thing that has been consistent over the decades is the Fed and other central banks, usually when they cut rates, they cut later than it looks like they should have done, with the benefit of hindsight. So therefore, they end up having to cut rapidly. So in a lot of ways, these bets for, say, 3 to 4 rate cuts this year are kind of trying to balance, does the Fed only cut once, or does it not cut until too late and then it has to cut 4 times?
Something that Yvonne mentioned, Garfield, was, and it came out in the minutes, was just this concept is when the Fed is going to start shrinking its asset portfolio, or slow the pace rather at which it does that. So how does that sort of play in, though, to these dynamics around the need for easing?
Well, that is another, at times ignored signpost to the idea that the Fed is going to be reluctant to cut rapidly. It's not showing a lot of signs of wanting to slow down its balance sheet reduction, and that is in and of itself a tightening move. The Fed has said as it reduces its balance sheet, that should put upward pressure on yields. That's a tightening measure. And as well as flagging that it's going to take them a while to slow down, they also signaled they want to end up with as small a balance sheet as possible. So all of that says to me they're still pretty much tightening in their bias.
All right, that was Bloomberg's chief rates correspondent for Asia and MLive contributor Garfield Reynolds. And we'll have more ahead, counting down to the market open for mainland China, Hong Kong, just about 5 minutes away. This is Bloomberg.
All right, taking a look when it comes to futures here. We're slightly on the downside here today, but certainly we have seen a substantial rally when it comes to CSI 300. In fact, we've been up about 7 straight days now. If you take a look at how this chart is looking like here, we basically broke above that 100-day moving average. We're getting close to that when it comes to the CSI 300. We've erased the losses for a year to date. HSCEI along the same line. So these bans on short selling certainly is lifting the market in some ways, Belle.
Yeah, that's right. And of course, what's also playing into it is the chip theme. We had those bumper NVIDIA numbers out. So those chip-linked stocks, very much the ones to watch at the open of markets in just a few minutes' time. You're watching Bloomberg Markets, China Open, just a few seconds out today. And it's interesting because you look at the Golden Dragon Index overnight, it was higher. But today you take a look at futures and we're actually setting up for a pretty modest start. And that's in the context of those blockbuster NVIDIA numbers that are driving the rest of the market higher. So not a great lead in, perhaps.
Yeah, yesterday was quite a rally, and obviously we've seen 7 days of gains when it comes to the onshore CSI 300, so maybe there's a bit of a pause here. But obviously, what we're hearing from policymakers and how they're tightening some of the grips on short selling, that did lift the market a bit yesterday in quite a big way. But then again, longer term, what does this mean when it comes to that institutional investors, and how comfortable are they coming back to a market where they are basically banning selling here when it comes to the first 30 minutes of trade? So certainly that is the one thing that we're watching very closely. And again, today we're slightly on the downside, about 1/5 of 1%. So we're snapping out of that streak, which is the longest winning streak we've seen in the CSI 300 since January of last year. So we're talking about 13 months now. So it's not unsubstantial. You take a look at the Hang Seng, though, we're flat at the open. HS Tech is catching a bit. Obviously, the AI stocks, the chip stocks are very much what's driving this region here this morning. You're seeing that in Korea, you're seeing that in Taiwan and in Japan here today as well. CGBs are a bit mixed, though. We're at 241, pretty solid when it comes to that 10-year, and it's been steady for some time. We're taking a look at when it comes to sector by sector. It's a mixed picture, but it really is the IT sector that is standing out. Consumption is getting a slight bid here this morning. We'll see how this all kind of plays out here. Industrials are starting to catch up here, but overall, it's kind of slow going as we look at the financials, as we look at developers here today. In terms of what we're looking at, of course, it's tech and its earnings. If you look at how the NVIDIA effect and how it plays out here in the greater China region, of course, we're watching very closely the likes of some of these AI proxies, Baidu, SMIC, watching iFly Tech, the like. So here we go. Baidu is actually lower by about 0.9%, but you're seeing SenseTime, Anhui iFly Tech, SMIC are all rallying here today. There was an interesting Reuters report about SMIC, just overall the geopolitical tensions here in the U.S. halting the permission to sell to advanced SMIC plant. You take a look when it comes to earnings. Trip.com came out with some pretty good ones in terms of fourth quarter. Revenue did beat estimates. The stock is slightly up this morning. Lenovo, Sinoland is up next. HSBC is one to watch. So we're down another day. We saw quite a bit of move downside yesterday, of course, when it came to those earnings. Definitely, it seems like, according to Jefferies, a messy sort of quarter in terms of results here. Outlook seems to be unclear. Of course, that write-down and that impairment from their stake in BOCOM certainly is what's worrying the market here right now. Let's bring in Xiaojia Zhi, Chief China Economist at Credit Agricole now, to wrap us through just the policy measures we've seen, everything that started from a triple R cut to now this deeper than expected LPR that we got this week. What does it tell you about the policy signals? Are more cuts to come? Or should we maybe put a bit more, I guess, caution to that now?
I think the latest policy measures are clearly sending more encouraging signals to the markets that the Chinese policymakers feel the urgency to address the weakest link of the economy, to revive confidence and stabilize the capital market. I think this is quite encouraging, and it should help support near-term market sentiment. But I think it is on the right direction. We are not there yet. We still need to see more of the concrete evidence in terms of improvement in the real data, and policymakers will have to do more to cement such a trend. So on the monetary policy side, I think latestly PBOC indeed surprised on the upside in terms of the scale of the easing, even though the timing has been a little bit kind of perceived as a little bit of delay to many of the market watchers. I think looking ahead, given the still persistent disinflationary pressures, given the still relatively weak real data, PBOC will do more. I think in terms of policy rate cut, I think there will be still likely a 20 bips cut to MLF. And also beyond that, I think there will be more reasonable to assume there will be more triple R to come. We expect 25 to 50 bips for the rest of this year. And also deposit rates, I think there are certainly room to cut more to lower the liability costs for the Chinese banks, so to help incentivize them to further lower the lending rate, i.e. the LPR.
Obviously, there is a bit of a lag effect when it comes to when they implement these rates and what it actually means for the economy. When do you think the economy is going to actually feel the full impact of lower rates?
If we look at the latest 25 bips cut to LPR, I think the more important is the policy signal. The real impact on the economy may not be that great, because I think the most important thing is not about mortgage rate not being low enough. Certainly there are, it's about the weak confidence, the weak expectations of future outlook. So that would need more of of the powerful and timely address by the policymakers as well. So beyond monetary policy, certainly there's room for the Chinese policymakers to announce more of the fiscal expansionary measures, which people will clearly closely watch for at the upcoming National People's Congress. And also for the property market, the biggest concern for the market at the moment, there are certainly room for more of the measures coming out from both demand and the supply side.
Yeah, I wanted to ask actually on the National People's Congress, given you just mentioned it there, but it is really going to be very closely watched for any sort of signals of that willingness to ramp up support. So what else are you going to be watching for at that event?
Yeah, I think fiscal policy, I think definitely quite important. I think these fiscal policies, if we would take into account both general fiscal deficit as the likelihood of the introduction of the special bond issuance to help offset the fiscal constraint of the local government, that would be quite helpful. And beyond that, people would also look at some of the work priorities for the Chinese policymakers to gauge the policy directions for the rest of the year. So fiscal, I think, is still something that the Chinese government has more room and definitely needed when the private demand remains quite soft.
Yeah, you mentioned did a whole report about deflation and what we're seeing across this economy here right now. In terms of what the trends that you're seeing, what does the path of reflation look like? Are we likely to see it this year?
In terms of CPI inflation, I think there will likely be a return of CPI inflation to positive readings, likely in the spring, say February or March. So that if that happens, it should help alleviate some of the concerns. But for the PPI, I think is a little bit more problematic. I think it will likely, such deflationary pressures will likely to be more, continue for the rest of the year, even though it will be less, prominent compared to last year. And also GDP deflator, once the CPI inflation comes back to positive direct territory, there could be a potential return to positive reading from the second quarter onwards if Chinese policymakers continue to introduce more of the policy support to drive, an expansion of the demand.
I'm interested then on that deflationary theme. And what did you make of the data that we got from the Lunar New Year break then?
Yeah. I think the headline Lunar New Year holiday spending data are quite, encouraging. But if you look at the underlying details, there are still some, signs for caution, so that we should, avoid some of the over extrapolation. For example, the per person on tourist spending are still declining by about 6%. Compared to 4 years ago. And if we look at the holiday spending data, there are also always some of the divergence between the holiday spending as well as the relatively soft retail sales growth. So that might be there are some of the still positive impact from the pent-up demand that could be the sustainability could be in question if the expectation of future income growth do not come back, more forcefully if policy easing are not strong enough. So there are still, things that are not that rosy. Yeah.
All right, Xiao Jia, we're going to leave it there. Xiao Jia, Chief China Economist at Credit Agricole. We're checking one stock in particular, and two stocks, really. There's a big deal that is happening here when it comes to China traditional Chinese medicine. That's TCM there. So Sinopharm is trying to take that company private. So that stock is jumping some 22%. I believe there's quite a sizable premium with that deal. So certainly one to watch here this morning, Belle.
Yeah, and also just continuing to track those lines we're getting from the BOK presser. Given that we had the decision coming out about half an hour ago and telling us that the BOK kept rates on hold at 3.5%. That was expected by all economists. But more context on that decision, they're saying that they're going to keep that restrictive stance for a sufficiently long period here. It's something that's, again, giving a bit more strength into the Korean won. And as well, they're expecting core inflation to be a little bit below the initial forecast over the course of this year. They're also looking to monitor other major countries' policies, FX volatility, and of course the Fed really plays into that because the BOK doesn't really have the same sort of bandwidth to cut as its counterpart in the US. But we'll have more ahead. This is Bloomberg. All right, taking a look at how the Nikkei is faring so far in the session, because we are just within a whisker, just a couple of points away now from the Nikkei retracing and going all the way back to December of 1989, just recovering some of those highs of that period before, of course, the bubble burst in Japanese equities. But the strength of that rally really predicated on a number of factors: the dovish BOJ, weak yen, corporate governance reforms. And then in the session today, it's really the IT index that's leading the gain so far, and that speaks so much, Yvonne, to the NVIDIA numbers that came out, those blockbuster numbers, yet again managing to impress the markets who had already priced this stock to perfection.
I mean, thank you, NVIDIA. I mean, we've been watching to hit these all-time highs for all week now. It looks like the Nikkei could be heading to that direction here today. In 1989, I mean, there's so many Taylor Swift references to these markets and everything in life now. Let's talk about the earnings season. Of course, obviously, there's a lot of other people, companies, I should say, that are reporting results. UOB, we talked about that net income missing despite the higher credit card and wealth management fees there. The stock's down some 2%. Qantas as well, falling after profit did fall. Airfares did ease after that post-COVID boom. And Fortescue, we're seeing first half profit up thanks to iron ore exports and just the resilience that we see in the iron ore price. We're up 1.5% there. Lenovo is coming up next as well here in Hong Kong. And of course, we're watching very closely later on today. You're going to catch our interview with the Fortescue CEO, Dino Otranto. He's going to be joining Tom McKenzie in London to discuss the firm's latest earnings and the company's outlook. That is happening at 5:30 p.m. Sydney, 2:30 p.m. here watching out of New York. All right, another one we're watching out for, Trip.com. Reported revenue for the fourth quarter that beat the street, and Bloomberg Intelligence's senior APAC gaming and hospitality research analyst, Angela Hanley, joins us now to break down those numbers. So, Angela, we're seeing when it comes to travel recovery in China has been strong throughout 2023. What was the surprise that we saw in the fourth quarter?
Well, after seeing the Trip.com's results, what it sees is that usually 4Q is supposed to be the seasonally low season, so it should be kind of weaker than 3Q. But it looks like the numbers are still as strong as 3Q, so that's kind of a surprise. And I feel like by the breakdown, it looks like the package tourist data and also the corporate traveling is recovering pretty well. So I believe that some recovery is coming not only about the domestic trip side, but also on the outbound tourism side. And also given that the marketing expenses was not that high. So I feel like maybe the company is doing pretty better. They can manage, they can segment the clients better so that they can maximize the profit from each client.
Yeah, you mentioned, okay, there's that seasonal factor that plays into the fourth quarter, but the first quarter seasonal factor is going to be really about Chinese New Year. What should investors be aware of, though, when it comes to the numbers for this quarter?
So everyone is traveling in China, and the company mentioned in earnings call that the people are prioritizing spending on tourism over others. So I guess that's also kind of explains why the tourism sector is doing much better than other consumer segments here. And it looks like this is going to be the driver for 2024 China's consumption sector as well. And on that part, I think the data on Lunar New Year looks pretty strong as shared by the tourism, TCOM. And it looks like the outbound tourism is one of the highlights. If you see like Thailand is doing visa free for Chinese, and Cambodia was talking about doing like letting people to pay in renminbi at hotels and tourism spots in Cambodia as well. So everyone is there to capture the Chinese tourists. So I think this is also the part that we have to think about. Also given that like the first part of the first quarter is coming from low base last year.
We talked about, the Lunar New Year, I mean, Macau certainly benefited, right? We saw, 1 million visitors in the first 6 days.
Good, yeah.
How's that going to impact the earnings?
I think the Macau numbers are looking really good as well. So it looks like the February actually has 2 less days than October last year.
Yes.
And then the visitors in Lunar New Year was much more than the October last year, October Golden Week. So we are expecting that probably gross gaming revenue in February might be even higher than the October last year.
Okay.
All right, Angela Hanley there. That was Bloomberg Intelligence Senior APAC Gaming and Hospitality Research Analyst. And sticking with the hospitality sector here, Marriott CEO Anthony Capuano sees more upside in China as domestic travel recovers. Speaking with Bloomberg, he says the hotel chain is seeing a travel rebound, not just in Asia, but in the US as well.
The U.S. has reached a normalized environment a little more quickly. If you look at the experience we had in our business last year, we saw global RevPAR, revenue per available room, which is the metric that we use to evaluate the strength of the business, increase about 15%. Single-digit growth here at home in the U.S., strong double-digit growth internationally. Now, some of that is because those markets opened a little more slowly, so they benefited from easier year-over-year comparisons. But even as we look into 24, we guided on our earnings call 3 to 5% global RevPAR growth this year. Again, disproportionately stronger international.
Let's sit in international just for a moment. So UK economy's contracting. Germany arguably in recession. Japan in one. China struggling. You don't see it in quite the same way, and I find that really, really interesting. Are you seeing a bounce back there? What do you actually see, in which region are you more constructive on?
So Asia broadly is really strong from a travel perspective right now. We think about Asia in 2 buckets, if you will. What we call APEC, Asia Pacific excluding China, and then Greater China. Greater China is fully recovered to pre-pandemic levels, although interestingly, largely on the shoulders of domestic demand. If you look at cross-border airlift, it's only about 60 or 70% recovered to pre-pandemic levels. So we actually think there's still a fair amount of upside to the China recovery story as more and more cross-border travel recovers. I'll be in China in 2 weeks, and I'm anxious to see how it feels in terms of international travel. I was there maybe 9 months ago, and it felt very domestic. I was in markets like Changsha and Chengdu and felt like I was one of the few international travelers. So it'll be quite interesting. When you look at the APEC markets, they are booming. Thailand is very strong. Singapore is very strong. I was just in Vietnam, really strong both from a development perspective and an inbound travel perspective. And the last comment I would make, you've seen China create some visa-free travel zones across the APEC region, and that's really impacting demand patterns.
I have to go there. We talk about banning iPhones. Is there a problem with staying at a Marriott hotel in China?
No. It's our second largest market. We just opened our 500th hotel in China. We've got another 400 hotels in the pipeline behind that. The vast majority of our portfolio is China-owned. The vast majority of our workforce is Chinese. So we see great strength in our China business.
That was the Marriott CEO, Anthony Capuano, with our colleagues Lisa Abramovich and Jonathan Ferro there. And here are some of the other corporate stories we're following this morning. Boeing is ousting the head of its 737 MAX program after a mid-air blowout of a fuel switch panel on an Alaska Airlines jet. Ed Clark steps down immediately after almost 18 years with the firm. He'll be replaced by Katie Ringgold. Boeing is also creating a new position with company-wide oversight of quality measures. The management changes are the first undertaken since the incident on January 5th. Air New Zealand warns it may raise ticket prices to cover rising costs. The carrier reported a 38% slump in interim earnings and forecasts an even worse second half. The firm says inflationary pressures have driven up non-fuel operating costs over the last 4 years. Air New Zealand is also facing intense competition on international routes and engine maintenance issues. And we're going to have more on Air New Zealand's plans in a few hours. That's when we're speaking exclusively with its CEO, Greg Foran. You can catch that interview at 11 a.m. in Hong Kong. That's 2 p.m. in Sydney. More ahead. This is Bloomberg.
All right, we're seeing another day in this rally when it comes to China. CSI 300, we're up for an 8th straight day here, up 0.5%. Hang Seng's marginally higher here, about 46 points on your Hang Seng. But of course, we talked about HSEI as well as CSI 300 continuing on to see gains year to date now after we erased the initial losses here. So chip space, thank you, NVIDIA. That certainly is helping. Take a look at how Hua Hong Semi, SMIC, SenseTime are all up more than 1%. Baidu is now back in green territory, so that certainly is one there to mark. AI stocks in focus. We got EVs as well. There was actually some more dire outlooks coming through from some of these U.S. EV makers like Rivian, for example. But there were some interesting comments from the Li Auto CEO calling for the industry M&A as we start to see this price competition really play out across the entire EV sector. So for the most part, we're mostly lower here today. Li Auto is flat. And we're watching, of course, when it comes to traditional Chinese medicine. That's one stock we're watching out for, flying this morning with Sinopharm proposing to take that company private for $60 cash per share. That is a 34% premium to the last close. So certainly that deal is lifting the market here this morning, Belle.
Yeah, absolutely. That is quite a significant upside there for any investors. But we'll have more ahead on Markets Asia. We're going to be talking earnings with UOB, Air New Zealand, and India's largest renewable energy company, Renew. Those exclusive interviews start from 11 a.m. in Hong Kong here on Bloomberg Television. That's it for Bloomberg Markets China Open. Bloomberg Markets Asia is next. This is Bloomberg.